Hello, Stuart Wills, mortgage advisor here. Just really wanted to go through a quick presentation on banks, making it easy to refix, and just tell you a little bit about why they do it and some experiences that we have. So first and foremost, we all know that we need banks. Well, at least we need the money that the banks give us in our mortgages. But there's also a few other things you should know, or at least consider. So first and foremost, a bank is a business and they're there to make money for their shareholders. That's their primary focus, as it is with any business. They also do not act as advisors. They create products, mortgages, savings products, etc., and they have limited options and they sell those to you. They use a lot of automated processes, mainly because it's cheaper for them. What they do is with the automated processes is it means that the bank branches do not have to have the expertise there. They can do things automatically, systemize it, and they might have a few specialty people in the head office. So it's cheaper for them, but it's easier for you. Now, easy processes make people complacent. We know this. Banks know this. Banks also have large marketing budgets, and they know how to build trust with that. Now, Kiwis generally trust the banks, but sometimes you've got to question whether they really should. So Linda's a client that I spoke to this month, looking to refix her mortgage. She has a mortgage with one of the main banks, and it's just under 520,000. And that's the same bank that she does all her banking with. Now, she's had her house for a few years, and it's got an e-valuation or online valuation of just over 800,000. So she does have 20% equity. Now, she thinks she's a good customer for the bank, and that was proven because they offered her the special rates. Now, the special rates with banks is always quite interesting. So they have what they call the carded rates or the advertised rates. And a lot of the banks do this. And then what they do is they offer a special or discount or margin. And they take that off of those rates and give you what they call their special rates. Now, when you get the email or the notification with the special rates, it looks good because you're paying less than all the other people. But are you really paying less than the other people? Well, unless you actually do full comparison with the different banks, you're not going to know. It's just what that one particular bank is telling them. So in Linda's case, the bank sent her those rates, but they didn't give her any advice. They didn't check to make sure that the rates are actually competitive with what else is available. They just gave her the discount. There was no discussion about which fixed term she should fix her loans for. That's a decision for her. There's no effort to check whether she has any other debt, any expensive debt like credit cards, stuff like that, that could be better as part of her mortgage at the lower rates. There's no review to ensure that the loan structure is still suitable or ever was suitable. There's no mention of increasing payments and how that might benefit Linda, especially in the long term. And if she really wanted to talk to somebody, there's just an 0800 number that she'll talk to some random person at the bank. Now, from the bank's point of view, no advice is good because of no responsibility. All the responsibility lies on Linda if she makes a mistake. So from our discussions, we found out what was important to Linda. So she wanted to have a little bit longer term, fix a term for a bit longer to give herself some more certainty. She's been through a period of high and low interest rates, and when they jump up, it's pretty stressful. So she was looking at a 3-year rate, and her special rate on that was 6.65%, versus the option that we presented, which was 5.99%. Now, when you look at her mortgage, that will save her $200 a month. Or, as we discussed, if she wants to keep paying the same amount, she'll pay her loan off a lot faster, which is what she wants to do. She also really wants to be able to talk to somebody when she needs to, which she's struggled with doing it at the bank. The random person behind the 0800 number often is not the person she needs to talk to, and she's been sitting on hold, she's been cut off, all of that type of thing. That is quite typical with banks. So really, was there a question of whether Linda should go to the bank or speak to an advisor? And I think it wasn't a hard decision. With an advisor, she has somebody available to talk to. With a bank, not so much. She's able to get advice from an advisor, but the bank give her very, very limited advice, if any, and generally they don't give advice. She wasn't quite aware, but she now realizes that the banks don't review the whole market. They just review what that bank can offer. And definitely they wouldn't suggest switching banks, even if it's a good idea. Sure, the banks make it quick and easy. One click and you can refix your mortgage. But does it offer good value? Now, in Linda's case, we don't think so. So Linda really had a couple of options. She could either take the easy option or the better option. And she chose the better option, and that was to get advice. So she was presented some options, and from those options, she now has a better mortgage. She's paying her mortgage off faster, and she even got a cash contribution when she refinanced her mortgage. All of that advice through an advisor was free. So how much is she saving? Well, if she just keeps paying the same amount that she would have with her bank at the higher interest rate, she'd be paying $200 per month more than what she could pay with the new bank. But when we discussed it, she's quite happy with those payments. So if she keeps the payments the same, she will shave almost 2 years off her 20-year mortgage, and that will save her just under $40,000. That's her wow moment. She was pretty pleased to see that, and she's now really focused on making an effort to pay that off. So if you're like Linda, you have a couple of choices when it comes to refixing your mortgage. You can take the easy option, click the refix on the app, and just hope that your bank is looking after you. You could, if you want, go and have a look at what else is available and research the market yourself. Might be a little bit harder than it seems, because most people, when they research the market, all they're looking at is those advertised or carded rates. They're not getting the special rates because the banks don't release those until they know what your situation is. Or she could contact the mortgage advisor like ourselves, and we can do that legwork for her. We can check what her bank can offer or your bank can offer, see whether we can squeeze a bit more out of them, but we can also check that with the rest of the market. Once we know what the various banks can offer, we can then present it to you. And normally, because we're doing this all the time, we know which banks are offering the best deals at any particular time. Now, we don't charge for this, and you don't have to take our advice, but it costs nothing to get that advice. And generally, people, once they see what we can do for them, they will work with us and make the right decisions moving forward. So if you click down below this video, there's a link there and you can get some more information, and we can start the process rolling with you now. Thank you very much.